There's one habit separating consistent traders from everyone else in 2026, and it's not what you think. It's not journaling. It's not backtesting. It's not meditating or reading more books or watching more YouTube videos. It's simpler than all of that, and most traders will never do it because it doesn't feel productive in the moment. But this one habit is the difference between accounts that grow steadily and accounts that blow up or stagnate forever. Here it is, reviewing your trades immediately after you close them. Not at the end of the day. Not at the end of the week. Immediately. Within 60 seconds of exiting a trade, win or loss, you stop and answer 3 questions. Did I follow my entry rule? Did I manage this trade according to my plan? Did I exit where I said I would? That's it. 3 questions. Takes 90 seconds. And if you do this after every single trade for 30 days, your entire trading career changes. Let me show you why this works and why almost nobody does it. 2 traders, same strategy, same win rate, same risk management on paper. One reviews every trade immediately. The other reviews at the end of the week, like everyone tells you to. After 3 months, one trader is up 38% and trading with complete confidence. The other is break-even at best, still making the same mistakes, still wondering why consistency feels impossible. The difference is feedback speed. When you wait until the end of the week to review your trades, the emotional context is gone. You look at a trade you took on Monday, and you don't remember what you were feeling. You don't remember the hesitation, the fear, the impatience that made you break your rules. All you see is the result. Win or loss. And results don't teach you anything about execution. You can win a trade while breaking every rule, and your brain registers it as success. You can lose a trade while executing perfectly, and your brain registers it as failure. Delayed review doesn't fix this because the emotional data is already lost. When you review immediately, the emotions are still fresh. You just exited a winner, and you remember that you almost exited early out of fear but held your plan. That's the lesson. Hold your plan even when fear shows up. You just took a loss, and you remember that you moved your stop because you couldn't accept being wrong. That's the lesson. Stop moving your stop. The emotional feedback loop is instant, and that's what rewires your brain. Not the analysis of the chart, the awareness of your behavior in the moment. The trader who reviews immediately, let's call him Ethan. He takes a trade. It stops out. He's frustrated. But before he even thinks about the next trade, he asks himself the 3 questions. Did I follow my entry rule? Yes. Did I manage it according to plan? Yes. Did I manage it according to plan? Yes. Did I exit where I planned? Yes. Okay. Trade was executed correctly. The loss is just variance. Nothing to fix. He moves on emotionally clean because he knows he did his job. His psychology stays intact. No spiral. No revenge trading. Just execution. The trader who waits until the weekend to review, let's call him Cole. He takes the same loss. He's frustrated. He doesn't review it. He just moves on to scanning for the next trade. But that frustration is still sitting in his body. It's unprocessed. So when he sees the next setup, he's not thinking clearly. He's still carrying the emotional residue from the last trade. He hesitates on a good entry because he's scared of another loss. Or he forces a bad entry because he needs to prove he's not broken. Either way, his execution is compromised. And by the weekend, when he finally reviews, he can't even remember what he was feeling. He just sees the result and blames the market or his strategy. Here's what makes this habit so powerful. It creates a real-time feedback loop between your actions and your awareness. Most traders operate on autopilot. They take trades, they react emotionally, they move on without ever connecting the dots between their behavior and their results. The immediate review forces you to pause and see the pattern. You start noticing, I moved my stop 3 times this week. I exited early on 4 winners. I took 2 trades that weren't even my setup. Those patterns are invisible if you're only reviewing once a week because they get buried in the noise. But when you review immediately, the patterns jump out. Ethan started noticing something in week 2. Every time he took a loss in the first hour of a session, he'd force a trade in the next 30 minutes trying to recover. He didn't realize he was doing it until the immediate reviews made it obvious. Once he saw the pattern, he added a rule. No trades for 1 hour after a loss. That one adjustment cut his bad trades by 60%. He didn't need a new strategy. He needed awareness of his behavior. An immediate review gave him that. Cole is still stuck because he doesn't have that real-time awareness. He knows he overtraded last week, but he doesn't know when or why. He knows he exited some winners early, but he can't pinpoint the emotional trigger. His reviews are vague. He looks at his journal and sees a mess of trades with no clear pattern because he's reviewing with a 7-day delay. The emotional data that would tell him exactly what's broken is long gone. Here's the shift you need to understand. Trading improvement isn't about learning more. It's about becoming aware of what you're already doing wrong and stopping it. And awareness requires immediate feedback. You can't fix a behavior you don't see. And you can't see a behavior if you wait a week to review it. The moment is where the lesson lives. The emotions, the hesitation, the fear, the impatience. That's the data. And it's only available immediately after the trade. This is why journaling at the end of the day doesn't work for most people. You write down what happened, but you've already forgotten the why. aka the trade, but you don't capture the emotional state that drove the execution. So your journal becomes a list of results, not a diagnostic tool. Immediate review changes this. You're capturing the emotion while it's still live. You're connecting your internal state to your external behavior in real time, and that connection is what creates change. Ethan's review process takes 90 seconds per trade. He's trading 4 times a day on average. That's 6 minutes total of review time. 6 minutes per day in exchange for complete awareness of his execution patterns. By week 3, he's not making the same mistakes anymore. Not because he's more disciplined, because he's aware. And awareness makes discipline automatic. You can't keep doing something once you're fully aware you're doing it. Cole spends 2 hours every Sunday reviewing his week. He's thorough. He's detailed. He's analyzing charts, looking for patterns, trying to figure out what went wrong. But it's all surface level because the emotional context is gone. He's treating trading like a technical problem when it's actually a behavioral problem. And behavioral problems can't be solved with delayed feedback. They require real-time awareness. Here's the framework. After every trade, before you do anything else, stop and answer 3 questions. Did I follow my entry rule exactly as written? Did I manage this trade according to my predefined plan? Did I exit at my planned level, or did I move it? Write down the answers. Not in detail, just yes or no. If the answer to all 3 is yes, the trade was successful regardless of outcome. If any answer is no, write down what you did instead and why you did it. That's the lesson. That's the pattern you need to fix. This habit sounds too simple to matter, and that's why most traders skip it. They think real improvement comes from complex analysis, from studying more, from finding better setups. But all of that is useless if you can't execute what you already know. And execution is a behavior problem, not a knowledge problem. Immediate review fixes behavior by making it visible in the moment when you can still feel what drove it. Ethan isn't a better trader than Cole because he knows more. He's better because he's aware of his patterns, and Cole isn't. Ethan sees himself hesitating and catches it. Cole hesitates and doesn't even notice until a week later, when it's too late to fix. Ethan sees himself forcing trades and stops the pattern. Cole forces trades and wonders why his results are inconsistent. Same knowledge, different awareness, completely different outcomes. Here's what happens when you do this for 30 days straight. Week 1, you're just building the habit. It feels weird to stop and review immediately. You want to jump into the next trade. But you force yourself to pause and answer the 3 questions. Week 2, patterns start emerging. You notice, you break your rules in specific situations. After losses, when you're bored, when the market is chopping. Week 3, you start catching yourself. Before you break the rule, you see the setup that's not quite right, and you remember, I always regret these trades. You don't take it. Week 4, the behavior is changing automatically. You're not fighting yourself anymore. You're just executing correctly because you've built awareness. By day 30, you're a different trader. Not because you learned a new strategy. Because you stopped doing the things that were killing your consistency. And you stopped them by seeing them in real time, over and over. Until your brain couldn't ignore the pattern anymore. That's the power of immediate review. It turns invisible behaviors into visible patterns. Invisible patterns can be fixed. Cole will still be struggling 6 months from now. Still wondering why he can't stay consistent. Still looking for the magic setup or the perfect indicator. Still doing weekly reviews that don't change anything because the feedback loop is too slow. Ethan will be consistently profitable. Not because he's more talented, because he built one habit that makes improvement inevitable. Immediate awareness of execution. You have a choice. Keep doing what everyone else does. Journal at the end of the day or the end of the week. Review when the emotions are gone and the lessons are buried. Wonder why you keep making the same mistakes. Or start reviewing immediately after every trade. Capture the emotional data while it's fresh. See your patterns in real time. Fix them before they compound into blown accounts. This is the habit. 3 questions, 90 seconds, after every single trade. Do it for 30 days and watch what happens. You'll stop overtrading because you'll see yourself doing it. You'll stop moving your stops because you'll catch the pattern. You'll stop exiting winners early because you'll notice the fear every time it shows up. And once you see it, you can't unsee it. And once you can't unsee it, you stop doing it. That's how consistency happens. Not from learning more, from becoming aware of what you're already doing and stopping the behaviors that don't serve you. Immediate review gives you that awareness. Everything else is noise.